Hi everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. So we're going to dive right in, take a look, and see what people are sharing. You want to follow me at Finance Square Finance. If you want to join our community, finding-value.com, where I dive deeper into all of these topics, looking for potential investment opportunities and sharing them with the community. Also sharing my portfolio and how I'm playing this commodity bull market that we are in. You get to see everything. So May Day coupon code if you want savings. Rock bottom entries. So we've got agricultural stocks. Commodities are showing strength. There's the downtrend breakout of DBA. There's the breakout right there coming on up, and that also is paired with momentum breakout on their relative strength indicator. But most of the time when it breaks out like this and you get the big green army, you don't need the relative strength indicator because you can see it in the size of the candlesticks. That's a function of strength. So that's looking good there, and that's he's got Mu, DBA, potash, all of those, and I go over Mu in my ETFs, and fertilizer's looking good too. And I do go over all those on the website. Uranium is the bottleneck. It says NVIDIA CEO, it's impossible to win AI race without nuclear. So I totally agree that nuclear is going to be a big part of this. Short term, I think natural gas is going to cover us in the short term. Long term, we got to go nuclear. I totally agree. I mean, we got to go a lot of nuclear, which will be good for uranium companies and uranium mining and all that. But I think it's going to take time. I think it's going to take time to develop nuclear solutions, and then I think it's going to take time to get all the mining ready to basically provide the uranium for that nuclear. So it's coming. Peter Sutherland says suppressing oil markets is a fool's gold move that will end badly. In the event of physical supply disruption, price discovery and arbitrage are crucial to route barrels globally. We urge the WH to stop the de facto glass ceiling of 70 West Texas Intermediate and let the paper market float as MENA escalates. So that's what he has in his opinion, that the oil markets could potentially be suppressed. I also think it's really weird where it is trading. Historically, if the inventories were to be fairly valued, we would be at like $90 a barrel, 85, $90 a barrel. Or what is it? Like 15-ish dollars, I think it was, underpriced. Maybe it's 85-ish dollars or so. Last time I looked. So 85-ish dollars is where we're supposed to be, but we're sitting down here in the upper 70s. Is there something that is legit in the system that the people who trade the oil markets either know or see that everyone else doesn't see? And that I do not know. And maybe that's why we're down here. It's difficult to say. Edward says almost everything is at all-time highs. Where's money rotating from? It's not rotating from anything. They're creating currency. When you create currency at a faster pace than there is assets, all assets go up. You don't rotate from anything. It's money flowing into everything. So that is what inflation is. And the only way that can exist is if you have more currency units coming into the system. That's the only way that everything can go up at the same time. If you hold the currency units stable and a sector goes up, it must draw currency from somewhere else for that sector to go up. So assets go up under inflationary periods because money continually comes into the system and then it flings it all across assets. And that's the only way you can have everything go up all at the same time. It's the only way. There cannot be any other way. Because if you hold the money supply stable, it must draw currency from another sector for that sector to go up and be more valuable. The Kobayashi letter says gold is trading at 40-year extremes. Gold prices have seen a truly historic rally this year and are up 29%. As a result, gold is now 15% above its 200-day moving average, or 2 standard deviations, the widest gap since 2020. Over the last 40 years, such a significant divergence has occurred only 8 times. Following these extremes, gold returns were flat within 1 to 6 months and gained just 5% within 12 months on average. History suggests that gold prices may be overextended in the short term. Can gold keep pushing higher? And there we are towards the top. It's difficult to say with certainty using these type of metrics here that something can or cannot do something. Under the hyperinflation of Germany, I'm sure that it went way past 2 standard deviations and went way up. Could gold continue to go higher? Yes, it could. It depends on the conditions. If the conditions are still good for gold to go higher in, gold can still go higher. If the conditions cease to exist, then maybe it's due for a pullback. I'm in the camp that the conditions are still good. Now, I also understand that this market, it feels like things aren't trading freely to some degree. And I know, and I've seen and read things where Powell does not want gold to go up too fast and too far. So it's hard to say in the short term what happens. We could have a correction or a consolidation. I was going to say consolidation. We could have a consolidation where we move sideways, and then this relieves itself and comes back down off of a correction that just moves sideways, where the 200-day moving average catches up with time. That can happen, or we continue to push it to the upside. No one knows that answer. Nobody knows the future, is what I'll say. Rig count, oil's down 4 and gas is up 3. So the rig count's down 1 in the U.S. We got North Star. It says when the Swiss franc breaks out versus the U.S. dollar, gold goes rocket. Look where we're at here. Now this is like background information. This is background information, and this is the stuff that I like to look at. When they have a relative strength indicator like this, which is basically what it is, it's a strength indicator of percent above some sort of moving average, which is a strength. It's saying, hey, you're really strong here. And it's like, can it still go up? This doesn't tell you anything about the conditions. It doesn't tell you where you're at. It doesn't tell you if you're at the end, the beginning. It doesn't tell you if you're breaking out, if the currency's weak. It doesn't tell you jack. So I see this, and I want to share this because people, they ask these questions like, can gold keep pushing higher? Yes, it can. But it doesn't mean that we know the exact path in the short term. The pressure is coming, and this is a pressure. So when this goes up and you start breaking out where the dollar gets weak against other currencies, which is exactly what we're seeing, a bunch of different currencies like the Canadian dollar, the Brazilian real, the Australian dollar. And this one here is the Swiss franc versus the US dollar. We break out, and that's the dollar getting weaker. So gold has nothing to do with gold itself. This has nothing to do with gold. It has everything to do with the weakness of dollar. If you have a weaker dollar, gold is priced in dollars, and gold is just a function or a measuring stick of how much dollar. The measuring stick of gold against other commodities is another thing that we use to basically remove the dollar from the equation. So this is stating that we could see a big breakout of the dollar getting weaker and the Swiss franc getting stronger. And the last time we did this was 2002. That's when commodities all ran. They ran from 2002 all the way to 2011, and there's the peak of 2011, that big wick at the top there. We've got a consolidation of this sideways, and now we're starting to break to the upside again. So we're looking for a breakout here for the Swiss franc versus the dollar. And really what we're doing is we're looking for dollar weakness. because that's what's going to power the commodity bull market. It's the denominator. And every time in history, it's been the denominator. It has nothing to do with the sector fundamentals for a full-on commodity bull market. We had a weaker dollar in the 1970s. Gold shot up. It was the denominator getting hit. 2002, it was the denominator getting hit. And here we are ready to break out again. Perfect. Perfect, perfect, perfect. Another commodity bull market that could be coming any second. TrendSpider says Warren Buffett is now underwater on all of his Oxy purchases made over the last 12 months. Even the GOAT misses sometimes. Well, he's not a trader, guys. Like, I don't understand why people use these type of things like, oh, he missed this. This isn't missing. He thought, in his opinion, that these were good valued opportunities. You don't know, and he doesn't know necessarily what the market will do in the short term. So what he does is he takes his best guess and he buys when it's cheap, thinking that this is going to break to the upside. I thought it was going to break to the upside too, but I also knew that we could get a pull down if the yield curve uninverted. We've got liquidity coming into the system, and I am surprised with the strength and the declines in oil inventory that oil is priced where it is today. I am surprised. And I'm sure Warren Buffett is also surprised. This may also be the last washout sale to get everybody on the wrong side of the boat before we flip it and squeeze the shorts to the upside for a big move in oil. That could also happen. And a lot of people focus too much on the day-to-day and month-to-month price movements when we can look at like big picture view. If Warren Buffett holds this for 5 years and oil goes to $500, does this little move lower matter? Not really. And then your question is, how come no one knew exactly that this was going to happen before it occurred? Some people are going to say, oh, I knew it was going to happen. Bull crap. Bull crap. You guys are full of it. If you knew it was going to happen with 100% certainty, why didn't you load up and make millions or billions of dollars off of it? But yet no one in the markets has made billions of dollars consistently calling short-term market movements. No one. Yeah, they can get lucky, but no one's done it consistently, and no one is in the top traders that are short-term traders. None. Tell me how successful they are. So he's like, even the GOAT misses some. That's short-term trading, guys. No one is successful on a 100% basis in the short term. And that's why Buffett has basically came up with the rules that he's got. Buy when there's value. Buy when it's undervalued. You can't control the short-term market movements. So that's what he's doing. Here's Jim Willie. I'm going to read this one. This is about platinum. So he says, platinum, the lifeline of a generation and the inevitable demise of central banks. For over a decade, the world has been sleepwalking through financial chaos. Chaos engineered by corrupt central bank policies, reckless debt issuance, and the outright manipulation of markets. Platinum, a precious metal long ignored by the masses, is now sitting on the cusp of a breakout so historic it will become the lifeline of an entire generation. Just like silver before it, platinum has been systematically suppressed, its true value buried underneath layers of financial engineering and fiat illusions. But that's about to change. The platinum bull market has been quietly building a foundation for over 10 years, laying the groundwork for what will be the greatest wealth transfer of our lifetime. The moment of truth arrived in 2020 when the secular bull market resumed after a 13-year cyclical bear market. And now a seismic blue breakout is imminent. This breakout will confirm what the elites have known all along. Platinum is about to explode. But the real story here isn't just about platinum. It's about the crumbling pillars of the global financial system. Central banks have engaged in what can only be described as monetary terrorism, flooding the world with fiat paper while suppressing the true value of hard assets. The debt bubble is unsustainable, and the manipulation of interest rates can only hold back the inevitable for so long. What they won't tell you is that while the public is distracted by stock market theatrics, the true power players, the global financial elites, are quietly positioning themselves in physical metals like platinum. because when the collapse comes, only those holding real assets will emerge victorious. Platinum is now hovering just below the historical blue breakout line, a generational signal. This is your last chance to recognize what is about to happen. When the breakout occurs, it will be the beginning of wave 3, the most powerful and explosive move in the secular bull market. Wave 3 will be the strongest, most profitable phase, and those who are positioned early will reap the rewards. This isn't just another bull market, it's a paradigm shift. The fiat-based financial system is rotting from within, and as the collapse unfolds, metals like platinum will be the backbone of a new financial order. We're on the verge of the greatest commodities bull market ever seen, and this is your chance to secure your place in the future. The next decade won't just be about making money. It will be about surviving the financial reckoning. Platinum will be the asset that bridges the old world and the new. When the dust settles, those who saw the writing on the wall and invested in real, tangible value will be the ones standing tall. The tidal wave is coming. Will you ride it or be swept away? Let me know what you think about that. I wanted to read it. I thought it was pretty good. Anticipating a massive leg up in silver reminiscent of 2011. Monthly trend lines are looking solid, and on the weekly, we're teetering on the last resistance zone. Exciting times are ahead, says Gold Ventures. I agree. JC says, you're seeing people on Twitter telling you that what's happening in Chinese stocks is bearish. You're seeing this too, right? I'm not crazy. They're out here telling you how bad it is when stocks go up. Just think about that. Remember that chart that I just showed you with the Swiss franc and the dollar? Emerging markets are going to go up like crazy because of the weakness of the dollar. And then you're going to see money rotate out of American assets into other assets like platinum, silver, gold, and emerging markets and other non-denominated dollar stuff for protection against weakness in the dollar. Here's platinum. So platinum bounce continues with momentum. I just read that thing, and this is what he's got here is a downtrend channel, flag channel, and that's broken to the upside and it's starting to run. There is, I like platinum a lot. It is one of the cheapest metal. It is the cheapest metal against the other metals on a ratio perspective. But platinum looks absolutely fantastic here. It looks really, really good. Warren is scanning the world, trying to get his opportunity cost as high as he can so that his individual decisions are better, says Charlie Munger. And then Warren Buffett says everything is a function of opportunity cost. Everything. Here's another Jim Willie one. I want to read this one too. It's just as long as the other one, maybe slightly shorter. He says, you might be asking, Jim, how much longer can this go on? That's the $1 million question. And my answer is not much longer. The world's central banks have pushed this Ponzi scheme to the limit, and we're approaching the breaking point. They've backed themselves into a corner, and the only way out is through a total reset of the financial system. So what he says is the coming liquidity crisis, the house of cards will fail. He says, let me make this crystal clear. We're living in a house of cards. The banks are leveraged to the hilt, holding trillions in treasury bills that they've used to issue even more debt. But when the music stops, when confidence in the US dollar falters, these banks are going to face a liquidity crisis, the likes of which we've never seen before. The entire system is built on confidence, and that confidence is rapidly eroding. The cracks are already visible. Skyrocketing asset prices, insane levels of corporate and household debt, and the dollar that's becoming more worthless by the day. Once the confidence breaks, banks will start to panic. They'll dump their assets, credit markets will freeze, and liquidity will vanish overnight. What happens then? He says deflation, not the mild deflation you read about in textbooks, but a brutal, crushing, deflationary spiral that wipes out trillions in wealth almost overnight. The economy will seize up and will enter a new dark age of financial chaos. So he says, prepare for the reset. The global financial order is dying. Here's the bottom line. The global financial system, as we know it, is dying. The U.S. Treasury, with its endless bills, is merely delaying the inevitable collapse. The central banks are out of ammunition. They've printed all the money they can print, and now they're out of tricks. Now I think they can print more money. Don't be fooled. This isn't just about the U.S. dollar. The entire global financial order is at risk. We're talking about a complete reset, one that will change the way we think about money, wealth, and value. Those who are prepared will survive. Those who aren't will be left in the dust. The elites know what's coming. That's why they're buying up gold, silver, and hard assets. They're positioning themselves for the post-collapse world. Are you? We're in the final stages of a long, slow collapse. The warnings are all around us. But most people are too distracted to see them. My advice, prepare now. Protect your wealth with real assets. Get out of the system while you can. Because when the collapse comes, and it will, it's going to happen fast. And most people won't even know what hit them. So that is his opinion there. Is some of that true? Probably. Is the time frame? I have no idea. Don't know. Here's platinum, still coiled like a spring, waiting for a breakout, and we're right underneath this, ready to rip for platinum here. Looking absolutely fantastic for a potential move higher. I've got ratios here. So uranium to nat gas ratio. Nat gas is cheap. Nat gas to oil, cheap. Nat gas to Dow Jones, cheap. This is nat gas versus uranium. Look how cheap we are for nat gas when it's starting to come on up. We were coming from a very low ratio level. Nat gas is also cheap to crude oil, and it's starting to head higher from a very, very, very cheap level. And then we've got nat gas versus Dow Jones, which is also at all-time lows, almost all-time lows. And it's starting to come back up. So nat gas is probably the cheapest. That is the cheapest commodity out there. The second cheapest is probably crude oil or platinum. And then way behind that, it's going to be silver. Way behind that will be palladium or some other commodities or whatever. Those are the cheapest ones right there. Bernsko says, hard to find a little tidbit here for Canadian heavy. RBCCM, even in bearish outlook, they get to see the heavy sour grades in demand as any supply will be on the light side. So what they say is heavy sour grades look to be the largest beneficiary. It says, while heavy sour streams will have a growing number of viable destinations. And that's what I think too. I think the heavy grade, since everything's changing to light, more, think of it as closer to natural gas. The heavy stuff is going to be in strong demand worldwide. You can blend this stuff with the lighter stuff to make diesel and other fuels. So I think Canada has a huge, it's positive with those heavy oils up there. Peter says, the Chinese government had no chance but to act this week. Housing starts are down 70% from their peak. Completions are down only 11% because the government has been arranging financing for property developers to enable them to finish previously stalled projects. Once that pipeline of old projects is cleared out, housing construction will plunge. What we saw this week was not a frontal assault to boost growth. It was a rearguard action to prevent economic collapse. And this is the building floor play started, and you can see how it's dive bombing off the back end. This is what a real estate market looks like in a collapse. You have your housing starts fall off a cliff, go down, they go well below the average, and this is deflationary and a deleveraging process. That is exactly what they're fighting. And most times what you'll see is you'll see home prices go down, you'll see interest rates go down at the same time, and they will not bounce because you went into an oversupplied, hypersupply phase of the market. And it's going to take some time for this to work its way down and do a recovery phase. It's going to take time. There's the time frame. So this is not good. This is definitely not good. Rock bottom entries. The dollar is acting very heavy at key support. A move below par will incite panic buying into exactly where we're at. I'm a little confused yesterday how precious metals were down. A little bit confused there. We had weaker dollar, weaker yields, and we had the yield curve uninverted. That is almost always a update for gold and silver, specifically gold. Gold was down, and I was completely surprised by that because you have the right market conditions for that to go up. And the dollar is knocking on the door for a breakdown. This is a must-watch 5-minute interview who calmly and clearly outlines why there's no reason for panic and why the market is misinterpreting OPEC to gradually return barrels in December, market dependent. There's no market share battle coming, in my opinion, is what he says. Here's a quote from Warren. He says, the best results occur at companies that require minimal assets to conduct high margin businesses and offer goods or services that will expand their sales volume with only minor needs for additional capital, is what he says there in that quote. But that's what we've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We've got the question and answer session that is occurring now. I may go into portfolio, picking through some of these companies to see what's down and what I would be adding into and how I would maybe construct a portfolio. Maybe I'll go over that as we go through it. If people are interested, I'll ask everybody. And I'll probably pick my favorites for different portfolio setups, dividends versus high growth or a combination of both. I do a combination. I like dividend payers. I try to choose high growth dividend paying companies. A lot of the growth comes from the commodity itself. So if we get big commodity moves to the upside, their dividends go way up. If they come on down, then your dividends will go down with it. So those are the ones that I usually look for. But that's what I've got for today. We'll catch you next time. This is Finding Value.